All right, ladies and gentlemen, I hope you had a wonderful day. We got a lot of relief after that craziness yesterday, and everything bounced back up. But with everything being considered, I still thought it was a good time to exit my small caps, and now I have a $100 trade for extreme volatility this week. So I'm going to go over that. We're going to talk about what happened in the market today, some of the plays, why I sold out of my IWM or my Russell futures if you have been following since Young Powell, and then I am going to go over what do I expect for the rest of this week and how it could bring some volatility. So Chad, what I need from you, a thumbs up on the video, make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stack Market. We are live every single morning and every day. All of these earnings plays, whether they hit or not, 1,000% or not, we are covering all of this live. It's all on that live stream. We'll see you there, baby. Run it.
Walking to the couch, it's the 2020 last. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, before we talk about any volatility and any plays, you have to understand what happened today. Today was the much-needed relief after yesterday, and yesterday was a very big down day. The way the VIX spiked up, how the market moved and everything, that was nothing to ignore. So getting half of those losses back today with a lot of it happening up at the gap up, not selling it off completely, and a couple of things calming down, the market definitely liked it. However, I do think today was just movement. We're moving around. The market's adjusting to everything going on right now, but I don't think it was too meaningful of anything to the downside or upside. If anything, what I want you to understand today, there was two main things that happened. We're going to start with the latter here, but the United Kingdom, they came out this morning. Their inflation data was lower than expected, and we were all just freaking out about inflation. So to see everybody overseas not dealing with the same thing, that was a huge sigh of relief. Remember, China is closed, so they were able to chill out. The yen went down. The Nikkei was able to go up. But then on top of all of this relief everybody was seeing, the dollar and rate cut odds did not do anything at all. I want to say that the dollar moved, but in the grand scope of things, it's right next to that yearly high it set yesterday. Even though the markets were able to bounce up 1.3 on the NASDAQ, it's not like it brought down the dollar from yesterday. And even better, those December rate cut odds, June, July, even March, none of them pulled back from the move they made yesterday. At the result of the CPI, you priced out a lot of the rate cuts. Today, they calmed down in the sense they didn't get worse, but you didn't watch the rate cut odds backtrack as much as we've seen on some of these other relief days. So that's where I'm saying I think overseas, no bad news. It allowed us to calm down. Markets sold off. A lot of people were caught off guard yesterday, had a very big reaction. I think today was the relief. Maybe tomorrow it'll do its own thing. I will be watching these factors to see if we get any more meaningful moves, but now I do think everything is going to boil down to next Friday, or this Friday, excuse me. So before I get into that, we'll talk about it a little, but here is why I sold out of my small caps today. I am even holding an ES short, and I said I'd close them around the same time, but since the ES short ran a little bit more than I was on the Russell, I decided to close out of the Russell today. I'm still holding my short for a little bit. I am not the most confident in any of this, and a lot of people are trying to take what I did today and what I said today and try to tie it to this play and that and say, well, you said this, you said that. I'm going to say what I mean right here, right now, and keep it very simple. I think that more new highs can happen in the market, but I am expecting a new degree in difficulty, aka I don't think it will be as easy to hit new all-time highs and keep ripping 50 points, 100 points through every level and keep going till no man's land until the data starts making that easier again. So now we're getting our first sets of negative data depending on how the other stuff follows up here until there is data showing inflation really dropping or the jobs are really calming down or even the dollar comes down. The way I'm looking at it now, we may not have the reaction on the market, but a lot of these things are stacking up and and then you throw seasonality in the mix, the way I'm looking at it is, yeah, market could still go up. I just don't think it's going to be able to rip through everything like it already has. If I'm wrong on this, that'll suck, but I could still be wrong in general. But the way I'm looking at this, I think there's a little bit better of a risk to reward to the downside or no play at all. If I wasn't in that ES, I would have just taken my profit on the March Russells, and then I would have been able to ride out. And even in the same respect, I am looking for a double dip on the Russell, depending on what happens. Bonds, dollar, data, all of that good stuff. Remember, the 10-year is now climbing above 4.25, getting into that 4.5. And anytime we've kind of been around these ranges, it's not like good things have happened in the market. So that's what I mean by that. That is what I got out of today. Even though there was relief, I am still a little bit doubtful. Do I doubt that the market could go up? No, but I do think it is going to have to work a little bit harder now on any of the next levels going forward until that data helps it out. So that's your second key. And now let's bring it back to the main event here. Tomorrow, or Friday, you're going to be getting the PPI, and I think this is going to be the big driver of the week. This kind of relates to the play we're going to go over with the volatility, but the way that I'm looking at this, the final number today had no real effect. We're going to get new, fresh inflation data on Friday related to producer prices. That's probably going to have the biggest reaction. Tomorrow, we get the jobless claims, and it might have a decent reaction. Last time, we had a little bit hotter of a jobless claims. There was a reaction, even though I wasn't expecting there to be one. So the latest jobless claims, there was a decent sized reaction. We shouldn't get too big of one tomorrow, but with the scope of everything, maybe we do get a reaction. Otherwise, PPI on Friday, that's going to be the set all be all. And keep this in mind, seasonality gets very interesting after this week, but now next week, all you have is the S&P Global PMIs and then the Fed minutes. That's kind of a light week. That's not going to really have too much. And usually when there's no news, that's been construed as good news. Even today with some of the relief, it seems like the market just wants to respond to fear right in front of it. That's why when we woke up and there wasn't bad UK data, we were like, ooh, okay, I guess things are better. So this is going to play out very interesting, and maybe I'm very early on this risk to reward. I sold out the Russell today. It went up another 0.5%, 1%. I could always be early with any of this, but the way I'm looking at it here, next week seasonality is going to be key, but you also have things working against that in the sense if there's no data, we still get more earnings, and then we're wrapping up earnings. There might just be a lot of nothing to keep markets higher or start melting up once again. So we'll see how it all plays out. But either way, I think these next 2 days are going to be very exciting. We have a lot in store, so let's talk about it. And now, let us get into the plays. So right off the bat, I got 3 different plays for you, but let's start with the title of the video here. What is this extreme volatility play? So hopefully you have watched this tutorial by now. It is how we turn 600 into like 7,000. I think it's that amount's at like 10,000 now. We've had a lot of good earnings hits, but I've been using this strategy called Ghetto Standard Deviation. If you go on YouTube and search Ghetto Standard Deviation, mine should be the first video that pops up. It's just a quick way to calculate what the options are pricing in and a quick way to see where outsized reactions can go on an option chain. We've been pricing in options, expected moves, and then doubling it up. It has been very simple. Some of you have learned a great deal. Some of you have made a great deal, and some of you are still asking me what it means. But the point is, it's very important info, and like I've told you, you can apply this at any point in the market to a lot of different things. It's not just reserved for options. So what I wanted to do today, we had a 2-3 standard deviation move yesterday on the market. Out of nowhere today, all of a sudden you're up. Okay, everything's fine, but nothing really happened. None of the bigger factors changed. I think you have a little bit more of bigger moves and volatility lurking, or you're just coming off of a big multiple standard deviation move in the market. So what did I decide to do? I did a 2 standard deviation, the Ghetto Standard Deviation. I did it on the SPY. So I did this with the wheat stocks not too long ago, and I told you guys about this, but quite simply, the general idea here is I did the same exact strategy. I went to the option chain on the S&P 500. So if you go to February 16th, see what it's pricing at the end of the week. You go to the at the monies, 203, and then 173. That's about like, what, $3.80. So the time that I did it, it was around, I think, like $3.50, so $7 both ways, but that's all I did in this instance, and I'll show you when I go to the contract prices, but quite simply, we have $3.80, times that by 2, a $7.60 move either direction. That would be 2 standard deviations. So $4.99 minus $7.90 to the downside, that takes you to $4.91, and then $4.99 plus $7.90, that leaves you with $5.06. So the crazy part about this is that this play moved a lot from when I was pricing it, so my strike prices are a little different, but what I decided to do, I went with a weekly expiring on Friday. I went with the 2 standard deviation plays, and what I grabbed was 2 of these 504 calls. I grabbed them at like 22 cents. They went up a little bit there at close, and then I grabbed 2 of the 400 puts, or the 490 puts, at 23 cents a pop. So these went down. The calls actually went up double, but like I'm telling you, after yesterday, 2 standard deviation move, these things go up more than 1,000%. And then today they started dropping almost 50% from where they closed yesterday. So we got the puts cheaper than that price. This was a 2 standard deviation move. And then same thing with the calls. You go to the calls here, these were already up. They were killing it. They were up over 1,000%. You had the big 2 standard deviation move. It ended up killing the premium. So the way I'm looking at it, I spent about $40, $50 on both directions, $100 total. If we get a outsized move either tomorrow on a recovery out of nowhere, a sell-off out of nowhere, and then PPI does the dirty work, if we move more than what the market's pricing in and we get a little bit more than this stability that we're seeing, I think either side of this option should be able to make you more than $40 or $100 net, just in case you get screwed on both of them. So we'll see how it plays out, but this is that big play. This is what I'm talking about. Please don't go crazy with it, and this is an extremely big risk. It's only 2 days of time, so take it all with a grain of salt, but at the very least, you can live vicariously through me, and we will be able to see how 2 standard deviation plays out on the index and the ETFs. So that should be fun, but that's the first play. Now on to first play number 2, or maybe we'll call this the first play, Uber. And man, sadly, I sold out of my free play. If you guys remember, after Uber earnings, I bought those Uber 80s. I flipped them for 100%. I made one free, and I had one free option. Well, it went up to like $36. It was like 300% today. I said, let me sell it, and I sold out. And then they just rocketed up. There was late upgrade news and overweight on Uber, and they raised the price target. Stock went absolutely crazy. Those contracts ended at 90 cents. So a 900%er that was free from last week, but I sold out early. But here's the deal. Uber has not stopped since pre-earnings. It is still driving good news left and right. They had pre-earnings run up, killed it on the earnings, even afterwards. Sympathy with Lyft today. What they announced was their first buyback, which was huge, as well as updated guidance on everything else. And then they had the Lyft Sympathy. They went crazy. Now you're getting these upgrades. So it's very simple here. Right now at this point, I do think it's either going to eventually kind of top out, or it may want to knock on the door of $100 soon. I do think people will start talking about that very soon. So watch out for that. And what I have here, buy the flushes, or you better know when it's going to pump throughout the whole day and get in really early, because those Ubers are all jacked up. We were buying them for pennies last week. They shot up, came down, and shot back up again. So realistically, I'm only going to be buying the flushes if it comes down, or I am just going to be looking for the morning. If it really is looking like it's going to be, or you get driven by news, just grab it quickly, and then hopefully you're able to ride it out. So I think it's going to be a tricky one. The crappy part about all of it, we sold out of that golden play today, but if you're still holding that, you could even get out, spread it, good luck, but do whatever. But Uber is definitely one to watch, and they made a lot of moves today. That is play number 1. Then play number 2. This one I really like for tomorrow, ALB. I wanted this play so badly today. You have no idea, but it was just way too much. The stock doesn't move that much on earnings. We went over the earnings preview, and I'll show you right here. And remember, this is what we are doing every day on stream. When I'm like, yo, I'm pricing in all these options, I'm bringing up these previews, we're going through, and I'm doing all of this pricing in real time. That's why I tell you, either be on this stream or get this stream alert so I can at least notify you when we're getting into it. But ALB, look at this. They were implying a 10% move. The at-the-money option price, that's one standard deviation. That's the near-term options implying something. that was pricing in 10%. So 2 standard deviations, just to like make any money on your 2 standard deviation plays, you would have needed Albemarle to go up by 20%. But then go look at their last 4 quarters. In any of the last year, they've moved about 2% to 1%. Only one time have they moved 5% or less. Every other time was lower there. And I was like, dude, this thing's pricing in 10%. People are really expecting something. You go and see where Albemarle is. I mean, they got clapped. They were just at 160. I think that's part of the reason why it was like this. So I'm sure people were waiting for a recovery or something, and that's why they were pricing in a lot. But I was like, dude, the option chain is just screaming this is priced way too much, because even if it did move, unless it went 20% up, any of those cheap plays, which are still $100 or more, you wouldn't have been able to make money on it. So unfortunately, I wasn't able to get that. The stock did end up not moving, so this should play out well for us tomorrow, because I'm going to be watching for the continuation. We'll see how people are feeling, upgrades, downgrades, watch the first couple of minutes, but I think ALB, this is going to be a good one for post-earnings, and here's the deal. Airbnb was a very good lesson today. I told you about Airbnb. I liked it. I was feeling good in the morning. It was up a little bit. We were like barely down, and then it came down, and then I went and I bought options. I went for the 160 Airbnbs. They went from $1 down to 20 cents. I said, let's steal those. They're even closer than the ones that we had. I had the 165s. Grabbed them at 20 cents, spent $20 just in case Airbnb, if it does do what I think it's going to do and get back up to that 166, 167 range following their earnings, since I don't think the earnings was that bad. I'm like, all right, these might be able to hit, but how did Airbnb play out? If you go to that contract today, you'll see how all of them played out. Let me get it up here. You'll see from the morning. So like we go to the 1 day, these contracts, they were going for $2 yesterday. They gapped down to like 30 to 50 cents, and then they dropped down to 20. I grabbed them at 20, and then they went down to like 13 or 10. They pretty much spent the first hour going down. And this is what I'm saying. Watch out for continuation plays, because this could happen. What a lot of you did that was smart, instead of going after, once I get clapped on a play, if you are watching it live, if you see me get clapped on one of these continuations, do not ever buy the one that I bought. Why? Because why would you want the 165 when you could have got the 160s for around the same price, a little bit more, or maybe you could have worked in the 162, gotten closer to the money for the same price. And that's what I'm saying. Any of these, they performed a lot better. But the general idea I want you to see is that if the first 3 to 5 minutes this thing does not bounce up and make a move, it's probably going to do something like this, where it either dies the rest of the day or will die half of the day, and then like with still 3 hours left, if it makes that move up, you could still get a gain. So believe it or not, we got like a 10-20% gain on this contract, but like I'm saying here, not all the continuations are going to play out as smooth. So tomorrow for Albemarle, I think it's either going to dive for a little bit and then reverse one way and then just go all day, or we might see something like this where the premiums die for over an hour or two until it finally settles down and then works its way back up. But it all depends on how some of the morning goes. So watch out for that and keep that in mind. That is play number 2. And then finally, play number 3, baby. DraftKings. They have earnings tomorrow. I made the play today because Penn reports tomorrow morning, but the way I'm looking at it, it's going to move tomorrow off Penn. If Penn does good, even if they do bad, it'll probably have a little bit of its ramp into close. People want this stock. It's up like 70% year to date or something insane after already being up another 100%. They have a lot of gains and a lot of things going on. The premium surprisingly isn't that high. I've seen way more stocks already where 2 standard deviations would have been like 40 or 30%. They're still pricing in like 10, 12%, but definitely not as high considering how much they've moved. But don't get it twisted, it's still expensive up there. So the way I'm saying this is just don't fall in love with it. I'm sure people are going to get hyped on it. We went early because we get to play the Penn sympathy. And the way I'm looking at it is that if the premium does run up, if Penn is good and then everything throughout the day is good and this thing just goes up 100, 200% like some of these other pre-earnings, I'm just going to sell out of all of them and then I won't have to play it, even though DraftKings could get a little nutty there. So keep that in mind. But as far as the plays in DraftKings, what I ended up doing, I don't even think it's on this screen. I went both ways. I grabbed the next week. Again, these are all 2 standard deviations. I grabbed the $56 call for 30 cents, and then I grabbed the $35 for 18 cents. So I spent $48 both ways. Kind of expensive given the price of the stock, but like I'm saying, DraftKings will be able to move. But depending on how these move tomorrow, maybe we get lucky and both puts and calls go up. If this has a good enough premium, I'm just down to sell it off. And then we also made a play on Penn today. We'll see how that ends up playing out. But besides that, I sold out of that Uber at 31. I sold out of one of the Celsiuses from yesterday, made 100%. Grabbed a Crocs play. That was part of the earnings Oracle. This was off of the Michael Burry stuff. Then we spent Twilio. All of the plays today we spent, if you remove Crocs, or even if you add them, if you just remove the Oatly shares, literally it was like $190, and then with like one of the play being like 70, so didn't really spend too much today, but I don't think any of them hit. I think maybe the Oracles or the Ciscos, they might do good tomorrow, but then again, we'll just see where everything plays out and how it goes from tomorrow, because even then in the morning, a lot of them surprised. That CME, we were up like 700%. I think it's only up a couple 100% now, but I didn't think this one was going to hit, and then it went crazy in the morning, so we're still a couple dollars from the money on that. Otherwise, riding out plays, I got bonds, I got the ES, no more Russell. We have a lot of options, still got some Airbnb, but let's see where this week takes us and if we get some outside standard deviation volatility. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, along your journey, some people will write you off from the beginning. Some people will be excited, and then they won't get as excited anymore. Their roots weren't deep enough. Some people will be with you all the way to the end, and the pressures of wealth in life will get in the way. And only a few of you will take it to the harvest and have people with you who will take it to the harvest, who will see the return of 10, 50, 100. Oh, my God. I hope they feel me. Chatadonia, the story's bigger than you think, but I love you. Drink that water. Stay hydrated. Stay healthy. I'll see you in the AM and horn.